If you have watched almost every ICT video on daily bias on YouTube and you have not still been able to understand how to get your daily bias, then great, you're welcome to the right place. Grab your pen and book. I'm going to teach you the easiest way to get your daily bias every single day. And look, this method is nowhere on YouTube. The method that took me from losing over 15 challenges to getting 18 plus payouts in the last 13 months. It's paid me enough, and I'm going to teach you for free. Then you're going to focus on three things: structure, POI, and market phases. And when it comes to structure, this is all you need to know. What you need to know about structure is the most basic thing here. So the market will be in either of these three frames, either in an uptrend, or in a downtrend, or in a range. So an uptrend is basically when the market is trending upwards, and a downtrend is basically when the market is trending downwards. So the market is either going to be any of these phases at every given time and in every given time frame. So what we need to know here now is, if for instance we are in an uptrend market, we expect the market to keep creating higher highs and higher lows, higher highs and higher lows. When the market is in this situation, we know the best time to trade is when the market pulls back. Okay, these are the best times where trading make more sense. When the market pulls back, all this pullback area is where we should be catching our trades. How do we make this very simple concept that we all know? How do we turn it into knowing our daily bias every single day? To know that, stick with me in this video. So the next one is point of interest. So there are many point of interest that ICT teaches about, and my major three fall under OB, fair value gap, and liquidity. So why do I prefer these three? Because they are the ones you can easily find everywhere and the most effective. Now there are other secondary POIs, right, like rejection block, breakers, and inverted fair value gaps. Now these ones too are still important, but we're going to focus on these other ones, and the same way we use these is still the same way you use every other POI you prefer to use or you like to use. Just pay attention. So the next important thing we have is market phases. So now this is where the main source is. This is when we turn the normal market structure reading into understanding daily bias. So what is market phases? Now, for instance, if we understand that the market moves like this when in an uptrend, then there are many phases. There are three major phases of the market. Either when the market is impulsively expanding and breaking previous high, that's phase one. And phase two is when the market is retracing. And phase three is when the market is continuing, okay, is continuing to go up. So your duty is to choose what phase are we in the market. Are we in this phase when you come to the market, or are you in this phase, or are we in this phase? That is it. Now, despite the fact that this is an uptrend, doesn't mean once it's an uptrend all you have to be looking for is buys. It depends on the phase. Now, for instance, if we are in a phase whereby price is on its way is retracing to a POI, maybe FVG or other block or something is here, and price is in this phase of retracing to this level, are we going to be looking for buys? No, sells, because we want to retrace. That's exactly why sometimes in an uptrend you look for sales in cases like this. Now, when the market has gotten to this place and has gained ground here, here is acting like a support, and price wants to continue higher, well, this is gonna be another phase, and in this phase all you're gonna be looking for is buys till we get to the high. That is the whole idea. So I'm gonna call these phases, you can call it any name you want to call, but you already understand what I mean, right? Now, what about the bearish trend? It's the same thing. As long as the bearish trend is characterized by this, then we have this phase whereby price is expanding lower, breaking lows. We have the phase where price is going to be retracing to important POIs, and we have the phase where price is going to still keep continuing. These are like the three major phases. So now that you know this phases thing, so now the next thing is where are you going to look for these things? What time frames are you going to apply this? Now I have three major time frames I look for what market phase we are. So I have the weekly, I have the daily, I have the 4 hours. So what do I use these time frames for? Well, I want to make sure, regardless of what trend the weekly is, it's in the same phase as the daily, and the daily is in the same phase as the 4 hour. This is going to make me know the exact bias I'm going to look for on that particular session or kill zone I'm on chart. Now this is what I mean. So for a typical day, the weekly time frame could have something like this, whereby price is bullish, but we just took out an old high. So we are in this phase whereby price is going up. Now when we are in this phase, the price is going up, where is price most likely going? Now this is the most important thing you need to know. When price just took out a previous high in an uptrend, you are no right supposed to try looking for sales or shorting it or predicting a retracement. The market can buy as long as possible and retrace whenever it wants. And those people that have been trying to short all this level, the market will keep going up to whenever it likes and fall whenever it likes. So the best thing to ever do when you see the market like this is to anticipate it even going higher. So if the weekly is in this level, then we are going higher. What about the daily? Now if the daily time frame structure is in a phase whereby price is retracing to a POI, it's not there yet, but it's retracing. That's not the same phase as the weekly. This weekly, we are anticipating to go higher. That's an up bias. And the daily, we are expecting it to come down to POI. That's a down bias. It's out of sync. So regardless of what 4 hours shows, even if 4 hours shows a phase whereby it's bullish or bearish, daily has made everything out of sync, so it cannot work. So even if the 4 hours is in a phase whereby it needs to go up, maybe in a phase whereby the uptrend has reacted to POI and is on its way up, it's not just good. We're not going to trust it, okay? Because just this daily time frame is out of point. So what do we do next instead? A situation, for instance, when the weekly is bullish, just like I explained, and the daily, maybe the daily is in a phase whereby price is reacting to a POI, we know that the next area is going to go is this up, so that's an upward bias also. What about the 4 hour? The 4 hour is in a situation whereby we are also in a bullish phase. So even if the 4 hours could be in a downtrend, that's still cool. But as long as we have created a low and price is showing that it wants to counter trade or retrace into an important area like FVG or whatever, then of course the 4 hours is in support, because this is where the market is going to up. In this case it's up, in this case up, so there is a trade. So let's get straight into examples of trades I have taken and how I was able to know the bias. Okay, so the first one is USD CAD match forts. Let's go there. So why am I talking about USD CAD match forts? Because it's a trade I actually took. It's not cherry picked. I took that trade and I called it publicly, and that's exactly why I am showing you that. So this is the strategy I use, like I said. Now we are on the weekly chart on USD CAD. Now the particular day we're talking about is May, is March 4th, and March 4th fall under this week, this candle week we see here. So on this particular week, what do we see the weekly time frame doing? What phase are we? Now it's clear the weekly is in an uptrend. So what particular phase are we? Well, the path tool is going to help. So we have this, we have price retrace here, and then we get this big massive push to the upside, and now we have retraced to something. What did we retrace to? Well, it's a POI, it's a fair value gap. So we retrace to a fair value gap, and then where are we headed to now? The previous week candle was so bullish, and that reaction is powerful, so we are most likely headed here. That is it. Do you see that? So it's clear that we are going up on weekly. What about daily? Take a look at how price bounced on that weekly fair value gap. You can see that we have a new order flow, very obvious here. We have low, we have high, we pulled back, and then we had this low, and then we now have this high here. So where is March 4th? Let's see which day it falls on. This candle, which was 4th of March, I know it closed bearish, but before it closed bearish, it actually pushed up and took out this high. This is where the retracement started from, and took out a high, like it hit DOL before it ended up this way. So I caught the bulls. So let's see what happened on the 4 hours. Now on the 4 hours, let's take a very good look at what the market was doing on 4th of March. So we had an active uptrend, cool. We had this one, cool. Now we did some break of structure to the downside, and then we corrected higher back, cool. Now we were bullish as at this time. Okay, we've created this high, there's a break of structure. Now we had an OB here, which is very important, POI. We had an OB here, and price retraced into it. Now I trade my I come to the chart by 7 a.m. Eastern time every day, okay, and I stay till 11 a.m. Eastern time every day, okay. That's when I close the day. Let me make this bigger. Right now in Nigerian time, 1 p.m. till 5 p.m. That's exactly my trading zone. So coming to my trading zone, this is where I saw price sitting in this place. So what phase is the 4 hours? Well, bullish, because we're in an uptrend. We retrace towards an OB, bullish OB. Now we have to continue higher. That's the phase we are. This is the phase we need to catch. This phase from OB to here. That's what 4 hour ones. What about daily? What phase were we on the daily? We are on the FVG, and we needed to catch from FVG to this high. More like this react here, then continue. That was it. As at this day, price was, as at my Q zone, price was halfway there. So forget that the candle is black now, it's bearish, but then it was bullish, it was halfway there. So it's to what? Join the move. That was what we had on the week, on the daily. Then on the weekly, what do we have? The same thing, bullish structure, pull back in the high, pull back to here, and we are going here. Can you see? So what phase? We are catching that main expansion leg from POI. That's exactly what we are doing, and that's how I got my draw on this day. So coming to the chart, that's my draw. Now I'm just going to add my entry model. I'm just going to check my entry model, and one thing you need to know, I separate my entry model from getting my bias, because that's a whole different ballgame. I don't need it to cloud my decision making because I want to get into a trade. My bias comes first, and my draw liquidity is up this place, and it got smashed. So in case you are doubting, in case you're doubting Thomas, this is the trade. 4th of March USD card. It's in my journal, and 2.5 R, 2% risk. And here we go. Let's see if we can get this open. Okay, so as you can see, I took the trade in real time. And let's see one other screenshot. That's the trade right there. I added my entry model. So yep, let's go to the next example. I'm going to use something more recent, more like a very recent example. So we have March 11 2025, and I won that trade still on USD card. So let's look at it. What phase of the market were we when that happened? So now March, so the same thing, no much difference. March 11th fell on last week, which is this candle, this particular candle right here, the most recent week candle right here. So we are still on this expansion phase, whereby we have to expand from here to here. That's a phase to catch buys, upward movement. What about the daily? We are in that phase of expansion too, because this got ignored after price hits that high that I was part of. Then we now entered into this OB, right? Can you see? That's OB we are reacting from. Now we are still in the expansion phase, trying to get here. Let's look for 11th. 11th is this particular day that closed as a doji, so it still buys, and my mind was to take out this high, look for buys. But although it didn't work out long term, but yeah, I caught the trade that price offered me. Now after tapping here, can you see a very clear 4-hour structures in play? As you can see, we have that one, that high, that breaker structure here. So let's look for 11th. So 11th was on this special day. So coming onto my trade session, this is exactly what I saw. I saw price reacting from these fair value gap. That's what I saw. And what phase is this? Well, the phase whereby the market is bullish, and judging from when I come to the chart, we just sat in here. This 10, I come to the chart by 1, so 3 hours after, we're still around here. And is that phase whereby we are looking for the expansion. The break has happened, the retracement has happened. Now is this expansion we are looking for, and I caught that trade, and that was 11th. So if you want proof, you see that proof on my journal. That's it. Second trade, USD card, March 11th, and that was on a Tuesday. That was 2.37 R, and here we go. That's the proof right there that I caught the trade. That was it with my entry model. So this video, I'm not going to teach entry model, because entry model is a whole different ball game. This is how to get your daily buyer. So that's how I knew that every of these 3 time frames were in sync. They had the same programs. Now, I will tell you again, I will repeat this again. You don't need all of them to be in an expansion leg. Okay, so the weekly could be bearish, but then it's in a retracement leg. As long as the retracement leg is upward, then it's an up bias. Okay, so what I mean is the weekly could literally be in this phase and I'll still look for buys. It could be a downtrend and a retracement leg is the phase we are anticipating, and that alone is enough to make me look for buys. And when will I stop looking for buys? When we get into this place, then it becomes risky to look for buys. Instead, sales becomes the idea. So that's it, keeping it as simple as possible. And here we go. That is on my Telegram channel, 11th March. That was the trade. Let's go TP hit here. And this was me posting my entry before it happens, right? I just told them everything. So now the idea is, if you're not in this free Telegram, well, you're cheating yourself, because I post my setups, I post psychological tips, I post breakdowns. Everything is free here. So if you want to improve your trading, join this free Telegram. So let's do another pair, Euro USD. That's another example, and it's a trade I took on the March 10th, 2025 on a Monday, and I won the trade. So let's go and look at what it is on the chart, how I was able to read that. So March 10th fell on which day? This is a weekly chart. So March 10th fell on this weekly candle right here. So it's a very recent price action. So what is the weekly doing? Well, the weekly is bearish. Sorry, it's bullish now, but it was bearish before. Now this is the history of what the Euro USD weekly time frame is doing. Okay, this is basically what the structure just did. What phase are we? Where we are in expansion phase. We just took out this high, we're expanding higher. And like I told you guys, when you're in this phase, you dare not, plan for things to start reversing on you. You don't do that. You follow the trend. It's bullish, it's impulsive, then we're going up. That's my conclusion for the weekly. Then for the daily time frame, where are we going? What day is 10th on this day, Monday, that it happened? So what phase are we on the daily? Well, I think the same thing. We are bullish. Well, we have this, then we have this, then we have this. See me trying to show you how everything came to be. And then we had this. As you can see, we made this high, we pull back, we made that high, we broke this. Okay, now we are between this high and this low. Price range and broke out. So we are in that expansion phase. As at this day, which is March 10th, on this day we don't have any high. Like, there is nothing like a high I can say, okay, we are ready for a retracement in this FVG. There was no sign. Price was still pretty bullish and impulsively going up, and then we're like, okay, cool, we are in that expansion phase and we are not ready to retrace yet. So up, we look for bullish trades, right? So on the 10th of March, which is this day, what phase are we on the 4 hours? Well, a clear bullish trend, very clear bullish trend. As you can see, we have this, we have this, we have this. Now price has reacted or retraced to this place called fair value gap. That's exactly where price reacted to. So now here becomes the draw. When I came to the charts, now if you come to the chart earlier, maybe London or anytime, what you're gonna see is a phase whereby price is retracing to the important area. So would you buy? Would you look for buys? No, your daily bias is not correct, it's not complete. Your weekly said bullish, your daily said bullish. What about your 4 hours? It's in a retracement leg, you're not ready. So when will you be ready? When it has finished retracing and it has gotten to an important area, you want to catch the expansion leg because it's in sync with the same direction as the weekly and the daily. And that's exactly how I got my daily bias to be buys for this day. And I applied my entry model. So prove that I took the trade. Let's see. So that's it, Euro USD long, March 10th. All right. So prove that I took the trade. All right, this is a weekly chart. Let me show you another chart. You can see that, right, on the same 4 hour time frame I took the trade. And if you go to my free Telegram, I also talked about the trade. Yep, this is it. When I posted limit active, fingers crossed, I'll see what the market have for me today. This was my entry model at play. Now if you want to learn my entry model, there's this video on this channel. You can go and learn my entry model. If you want a private coaching on how to understand daily bias in depthly, maybe you watch the video and you still want to know more, then you hit me up on my DM and send me Forex so that I add you to the mentorship where you're going to learn how to get your daily bias across all markets, across all conditions, and also how to get your entry model, my own customized way that's giving me payout. A little recap. So what is the recap about? We need structure, we need POI, and we need market phases to determine bias and direction. When you know your structure, you can be able to mark out whether the market is bullish or bearish. When you understand POI, you need to know whether the price is retracing to the POI or price is leaving the POI to continue the trend. And phase is for you to understand what leg are we expecting. Are we expecting a retracement leg, or we just broke an old high and we are very bullish, or we broke an old low and we're very bearish in the case of a downtrend? Or are we in the phase whereby we have just mitigated the POI and we need to continue that expansion leg? I'll see you guys in the next video. I know this helps. This other video on the screen is going to help you more. Peace.